welcome to another month-end video. So today we're going to be going over the month of May. I think I'm going to take the same route as I did last time, just going over a bit personally in terms of my account, and then go over a bit about the market conditions, what worked, what didn't, and like I said, go through a few stocks. There were big movers or good plays during the month for either me or any investor that I might have missed, and yeah, we'll go from there. So to start off, I am not in a drawdown this month compared to last month. However, I only think I made like 1% returns, which is fine with me considering market conditions, right? We went over this in the last video. So that's pretty simple. It's not always going to be a linear route. You're in capital preservation mode. So my goal was to maintain a drawdown of less than 10%, which I've done so far, and it, hopefully we can get some upwards momentum or something. Obviously, there's a few things this month, few trades I could have probably avoided, but it is what it is. It happens. When you're really competitive and really want to become the best trader you want to be or want to become, I guess, there's always a few things you can nitpick. And when you don't see many plays for 2 months, it's almost like, your level of A grade quality play becomes lower, just, naturally for not seeing some for so long. But I mean, it is what it is. Nothing bad. Like I said, I'm on a 1% account returns this month, which is exactly what I was aiming for. Well, not what I was aiming for, but like I said, minimizing drawdowns. I was down like 7% at one point, but as we'll see at the end of the month, there was a nice little run there that came in handy. So like I said last video, the goal is to not dig yourself in a hole, because if you do, I'm almost at account highs. If I would have done myself in a 20-25% hole, 30% hole, 50, who knows? A lot of people do. I wouldn't be right there right now, but I'm in a position, where you get one week or so of good trading, and I'm, almost at record highs. So again, to my last video, that's your motivation for keeping alive during these markets. And if you didn't, well, you got more work to do, I guess. But everyone does, so it is what it is. So yeah, 1%. Markets were choppy all month, as you can see here. Basically we're at the same place we were a month ago. Went down, up, down, up. QQQ had a bit of a bigger hit, as you can see, the NASDAQ here, or I guess tech. But it did, like I said here, last month get a nice run. But again, just, choppiness, as you can see here. It's not, it doesn't look like May. So I'm pretty happy overall. This is what the markets did. I guess steel, coal, tech at the end of the month rallied. You can see here, had a good end of month here. Financial services, didn't do much with their flagging. Steel, let's look at SLVs, flagging looking nice for next month. Did have somewhat decent month. Gold as well, up about 8% or so. Clean energy got hit hard, did not really return. Solar as well. As we mentioned last time, we traded the semiconductors quite a bit in the last month. And here in May, it actually had a nice rebound here up to 200 SMA, which is beautiful. And I actually played a few at the end of the month here, which we might go over. Other than that, like I said, coal. I want to go over here to the coal. We got here. You can see it had a 20% month, which is great. Let's go over steel. Steel as well. As you can see, it actually did pull back, but at the beginning of the month, there was a lot of steel plays going, such as X. As you can see here, at the beginning of the month, they had quite a few runs. There's quite a few stocks along with that one that went early month, which was quite well. Already went over tech. So yeah, that's the main things that went on. Not too much. It's pretty choppy. There's a few sectors that had a few runs for a short period, like tech here at the end of the month. Hopefully, as we can see, it's back above all the moving averages here. So hopefully we can get another run up, which would be ideal. A little bit of consolidation here. So yeah, other than that, not much. Like I said, the silver is lining up. If you look at the higher time frame here, if you zoom out a bit, it's in a massive, flag, and it looks ready to break out, which should be cool. Financial services, went over that as well. you know, it has a lot of room up actually, but you know, it's in a big flag here. So overall, it's a choppy market. But at the end of the month, like I said, I made back quite a bit of returns to you know, make a 1% return at the end of the month with this run here in the QQQ, SPY, IWN. And IWN, by the way, went over that last month, still in a, you know, massive flag here. If you look at the weekly, it's even nicer, right? So if, you know, if it breaks out of this 228, 229, we could get 250s, which would be kind of, you know, it would be fun. I'm actually in TNA right here from this day here, I believe, when it broke out a little bit, where I had my line previously, right there. So this one's looking good as well. IWN, Russell. So yeah, things are shaping up. There's actually, last month there was no setups. This month, you know, indices haven't broken out, but there's a lot under the surface. There's still a lot of things that are looking very well, and setting up nicely. If you look at, you know, past leaders, net, you know, it's holding up really well here. Undercut this higher, this lower low here, but you know, for one day, it held the 200 SMA, so it's holding up very well. CrowdStrike again, higher low. You know, we can go over many of the leaders here again, higher low. If it looks at it when you go on the indices here, see higher low, higher low, higher low, higher. So it was a rough little period, but if you really zoom out and look, we're still in an uptrend, which is, you know, confirmation for me. And if on these days here, where it really looked like it was going to break down, if you look through stocks in the stock market, SQ did break out a little bit, but if you look through stocks and prior leaders, you could just tell it just didn't want to give. Usually when markets give, like in this period here or whatever, even here, like there's almost no bids, and here every tick down was kind of difficult. Obviously, other than a few, but you'd have that feeling that it wasn't ready to lose all the moving averages yet. So who knows how long it lasts for? I can't tell you. No one can. I guess you just got to trade the market, right? And we'll see from there. So I guess we can go on a few stocks that worked, and really nothing really worked. Again, nothing really worked all month until the late month, especially in tech, which is where most of the growth stocks are right here, right? It's 3 times leverage, but it had a 20% move. FANG2 had a nice late month, but as you can see, it didn't do well most of the month. But yeah, late month there was a little run, but other than that, the month was pretty brutal and pretty boring. I was mostly cash. It's probably the month I traded the less since I've started. You know, just you got to know when the opportunities are there and when they're not, and when they're not, you gotta lay back on the gas a little bit. And just be ready for when the market turns up again, right? Like the issue with a lot of traders is you got to take vacation, but when's the right time to take vacation? Really never. So the real question you're asking yourself is, when am I going to lose the least amount of money by taking? Because every day there's opportunity in the stock market, right? But at the same time, you can't just leave. Getting to my point, you can't just leave and completely neglect the markets, because as I said right here, I could have left here and say, you know, it's a bad market, let's go on vacation, close the laptops off the grid. You never know when things can turn around. Like this could just be the beginning of another run, right? When it undercut all here, you know, if this would be a stock, it's kind of like a bullish looking thing, right? It undercuts all these, and then it's kind of ordered the moving average is setting up. So indices don't move the same, but you know, regardless, you got to be, you know, you got to take time off and step off the gas. You know, maybe not be at your screens all day. Maybe, you know, step a little back on the actual trading and the intenseness, and maybe study, read books, you know, go on vacation, have your laptop, and maybe just trade the A+ setup. You got to keep monitoring, because you never know when you know, opportunity can present itself. But at the same time, on a side note, you know, you got to take somewhat of a vacation at one point, because the issue is a lot of people burn out, right? When is the right time to not make money? And often the question is never. So you got to pick time. These are times where you step off the gas. If you were planning on taking a vacation, you do it, but you don't completely, you know, go off the grid. So yeah, late month there's a little run. I was ready for it. I wasn't sure. Honestly, I thought it was gonna be like a little bounce into here and then fail. Apparently, I was wrong, right? And that's why you don't listen, you know, to everyone. If you go on Twitter, you know, CNBC, all these social medias, it was the end of the world. Market was gonna crash, da 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 da. And you know, it might, right? Will it? Potentially. Do I know? Do they know? No. They just make an assumption on what they believe in that moment in time. If you listen to these guys, you're never gonna make money in the stock market. right here, for example, let's say they say, oh, it's it's a little bounce, it's gonna crash, da da da, and you go all cash, you sell everything, and you had good positions, building proper structures, or there was nice stocks, forming nice setups, and you would just completely go off the grid and sell everything. Like I said, I made 7-8% at the end of the month. I would have missed on all of that because I would be listening to these guys. Me too. Here, I believe the same thing as them when they were on TV, like let's say on Twitter. We all believe this in the moment, but it can switch in the blink of an eye how the market looks. You always got to be ready, right? And this is why you can't listen to these people because they're not going to hold your hand. Jim Cramer goes on TV and says this stock's weak. Okay, it might be looking weak when that minute and that second when he's on TV and for that day. What about the next morning when it gaps up on good earnings or whatever, or an article or good news, whatever? Is he still going to be there? Or are you still going to keep it short because Jim Cramer said it was short? And not to say he was wrong. At the time, that's what he believed. And maybe I would have believed that also. But that's just an example that, if you expand it in a global and you take your whole trading career, you're just going to get blown out. You can't, because they're entertainment, right? They're just giving their opinion on what they think in the moment. You might shut off the TV and there's news and their whole opinion changes. Or whatnot. It can be whatever. So you got to trade your own market yourself, and you got to figure it out. And this goes back to leadership in trading, right? Sorry, I'm going on a tangent here, but there's not much that went on this month either way. So we're just gonna, we're gonna keep rolling here. But you have to have a level of self leadership in trading. If you always, base yourselves on other people on Twitter, on TV, etc., to do the work for you, you're never going to be successful. It doesn't matter where you are in life. Is it in sports, in business, whatever? If you don't have the self leadership, like managers, like, they have leadership, that's team leadership, but self leadership, that inner will to really, find your own stocks, create your own scan, your own, criteria, get your own charts, get your own risk management, steal from other people. I'm not saying don't, the strategies itself and the methodologies, learn from everyone and become your own trader and take what they say and what he says and, put it all together and do what fits you. But in terms of actually stock selection and getting in and out and all these things and predictions about the future, which no one really knows, you got to do it yourself. You got to bring up your own opinion and trade yourself. Your own stocks, your own charts, your own, ideas. And that comes from, a level of self-leadership. You have to have that inner will to want to figure it out yourself. Study your losses, study your winners. This is all part of, having a inner self leadership, and wanting to become a better trader. If you guys really want to be profitable and become a leader in this industry, right? And because in reality, there's only 5-10% of retail traders that actually make it. So in reality, if you make it, you are, in the top 5%, of people that try. But if you really want to be in the top, 10% of that 5%, you really, or just in general, you got to put in, you have to have that self-will to really master your craft. And if you're just listening to these people and looking for a shortcut, it's never going to work. It's never going to work. People may think it does, but it will never. You'll never see a good trader which takes opinions from other people, right? In that regards. So, for example, let's say on this day here, Jim Cramer says, I think the market's topped, right? Or any day, and you go on your portfolio and, or in a stock, let's put this example out. Let's say you're in Facebook, on one day or Tesla. Let's just go an actual example here. Let's go, you're in Tesla. All right, so you're on Tesla this day right here. Let's just zoom in here. You're in this day right here. And right here, right? Let's say Jim Cramer goes on TV and says, I think this stock is overvalued. It's overpriced. It's going down, right? And let's assume you're in the stock. Long. Let's start with long. So you sell the stock. Was his opinion valid? Did you get stopped out? Did you follow your rules? Let's say you got in on this day here. Look at the move you missed out on before it even closed below a moving average, 65%, or the peak here, 75%. So what good was it to listen to him rather than look at the chart and decide for yourself and with your pre-planned, trade with your risk and your size and etc. Right? If you don't listen to him, which you're going against him, well, then you did well. But at this point, why didn't you listen to him in the first place? Because it doesn't matter. Because if you didn't listen to him and it went well, but if you wouldn't listen to him in the first place, it would have went well if you kept to your rules. And then let's say vice versa, you're short. He says the stock's going to go down. All right? Sure, it's going down. So you short it and you're short. And then the stock keeps going up all day, but you're like, I know what? Jim Cramer said it would go down, so I'm going to keep it. He said it on TV, Monday morning. It's going to go down. And then you're at a 10-hour loss. And then you wake up the next morning and then it gaps up 15%. All right? But Jim Cramer doesn't go on TV today, only tomorrow. What are you going to do? Wait for Jim Cramer on Thursday when you're down 30%? Like, it goes back to my point where they're not going to hold your hand. He might have thought that in that moment. But when it closed strong and then he might have changed his opinion. And then when it gapped up, he might have changed his opinion even more to bullish, right? You don't know that. He's not going to hold your hand. And then you wait for Thursday, you're down 30%. So if you don't listen to him, right, and you sell it, well, you're in the green. You did it right. You managed your risk. You took your 1 hour loss and you're out. And if you listen to him, well, you're losing a lot of money. And just scale this across your whole account. This is why you can't follow these people. Let's say Jim Cramer is not in the picture. You follow your risk mitigation, right? You get in, you have a 1 hour loss, it hits it, you're out. It doesn't matter what he says. And some people will say, well, when Jim Cramer goes on TV, he actually affects the market because he has such a big, influence on his there's so many people watching it. He influences the market himself. Sure. What does that have to do with what you trade, right? Again, let's say the same scenario. You get in here, right? You're long. Well, you get in here, whatever. What doesn't matter. You're long. He goes on TV, right? He says it's a short. Tesla's going down, overvalued. Da 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 da. Speculative money's out. Okay, you're long. So you sell it. Okay, fine. You're right on this time, right? For this one. Otherwise, you may. Let's say he does that and he's wrong, and what happens. So you sold and you missed out on these profits, right? So you got two scenarios here. Right? Let's say he's right and it goes down. So you sell it right away. Boom. As we mentioned. Now, imagine another world, a miraculous world where, it would be impossible to not listen to these people. Wow, what a thought, right? You don't listen to these people. But he controls the market. Whatever he says does affect the market. So you're along here and he says it's a short. And because he said it's short, the Tesla stock starts crashing. Right? And you're listening, and you do not listen, sorry. But you have a trading plan, as I mentioned earlier. You create your own trading plan. You have your own risk manager. You have your own position size, and it hits your stop. You take a 1 hour loss. What's the difference if you were listening to Jim Cramer or not? It doesn't matter what he says. You will trade what's on your screen. If your trade is not going out, whether he said it was a short or not, it doesn't matter. You stop out at 1 hour, it doesn't matter. You got to trade what you're trading and what on your hypothesis. So it doesn't matter if he affects the market or not. You trade the market independently in what you see in front of you. So there's none of these scenarios unless you do what he says and he ends up being right. Right? The only thing you get out of that is the same result you would get if you would trade without his opinion and you would follow your rules. There's no scenario in which you're listening to Jim Cramer or any of these analysts on TV that you're in a better position. There's none. There's two that you're in the same position as if you wouldn't listen to him, and that's if you do what he says and he's right. And all other situations, you're in the worst. So you tell me which one's better. Figuring out how to do it yourself, right? Or listening to these morons on TV. And not to say they're morons, I'm just saying they are saying what they think in the moment. They're on TV, they need to say things. It could change an hour after, a day after, 2 hours. He's not going to be beside you when things don't go as planned or as they go as planned. So you got to. Do you think Jim Cramer got there by listening on someone on TV or any of these big traders, right? Mark Minervini, Stobbe, Christian. Do you think these guys got there by listening to these guys on TV? No, there's none of these guys that do that. So I don't know where the assumption comes that these people think. Well, I know where it comes from. They want easy money, but it goes back. You have to have a level of self-leadership to figure these things out yourself. If you don't, you'll never be successful. So again, sorry for the rant, but let's go on some trades that worked this month. This is a lower liquidity, smaller cap stock. LEDs here. We got a nice on the hour time frame. We had a nice breakout here, which would have led to a 115%, winner on the top here. Obviously, drawn down here, but a lot of pumpers got into it at this point here on Twitter. So obviously, you would have probably sold prior, but either way, it was a nice breakout. This is a money-making setup. right here, big move, pull back, moving averages, tight range, breakout. You know, you can only learn this setup and make millions in the stock market. So study this chart, learn it, play it. PDSB, this is another EP. And by the way, these are almost all EPs. It's mostly all that really worked, like in terms of noticeable gains this month. So here it had great phase one data. I think Citadel, there's a few banks that had a buy rating on it. As you can see, multi-month base, episodic pivot. Study these plays also. This is another really important setup to learn, for explosive returns. Great phase one data, as you can see here, massive volume. There's not many days, maybe 3 other days that had higher volume. No, only two others, right? So you gotta, and if you looked intraday, like within 15 minutes, it was already almost at its average daily volume. So this is you get in opening range highs, play this, stop would be a low of day. And as you can see, it went 103%, and it might go even more here, right? This is just where I'm at this point while recording this. Jill, this is another one. We had a big mover here since February was up 160%. January, had a nice tight flag here, right? Look at this flag, tight range, get in here on this day, and it even had a secondary entry, which is something that I've realized a lot, and if you study, you would realize a lot of these breakouts, they break out, and if you miss this one, it's not a big deal. You got to keep it on your chart, right? As you can see here on the 1 hour, it comes down to test it. And this is where it's either you can add if you're not full size, or if you missed it, you get in. And this is often, when I get the first alert, I'm not sure if it's really gonna break out. Jill's not really a market leader, let's say, but it is in terms of its chart. But I mean, as a business itself, so you keep it on your chart here, and often you'll see here you'll have a secondary entry where it'll just tap the breakout level where the resistance was, and it'll take off, which is, very, very profitable. So don't if you realize if your alert goes off here and you're a bit of a chase or whatnot, if you're not sure, keep it on eye and look for this. You're getting a lot of success with that. BNTX, this was an episodic pivot. Also, we talked about it last month. Had a huge EP here, massive numbers, went up 100%. Had earnings here again. Look at these numbers: 7,600% year over year, 4,000 forward looking next quarter. There's a lot of hype around the stock, insane numbers, like they're growing. These numbers they're not sustainable, but this is what you call a true, if you guys want to study what true growth looks like with EP numbers, this is it, right? So obviously here it had another EP type number day. Unfortunately, it can only have so many gap ups in a row before it works, right? All the eyes are already on it. But however, it is, it's lining up perfectly for June here. Nice flag. But the play was the episodic pivot, right? There was a parabolic short here when it gapped up, but it barely gapped up, and so I skipped on it, which obviously would have been a nice play. But here you get 3 days down, 35% in 3 days, right? And it gaps down here, huge gap down. This is another hugely highly profitable setup in trading. Gaps down here, and you get in on this day, and it made a 42% play. I didn't play it, obviously I missed it, and also it had earnings on this day here, which I try to avoid around earnings days. But again, going back on it, I would have played it. I didn't realize it was down 35% on that gap down here. So, and I think there's other things going on. I kind of contemplated it and kind of just passed by the radar. Here, same thing, another EP, setting up here, had a nice flag, gapped up, insane numbers. It's a basic materials, which is a super hot market right now. Now it's up 70% since. Tiger, I did play this one here, EP, insane numbers, gapped up, huge volume, highest volume day since its IPO, as you can see here. Volume leads, and volume's kind of tricky because a lot of times by the time you realize the volume's there, it's already broken out, right? It's on the breakout day. So what are you going to do? Look at it the next day and then get in where it's already up 20%? But you can get that feeling when the market's in pre-market 5 minutes, 15 minutes in the day and it's already at average daily volume, there's something up, right? That's a good sign. And I'm still in this one, right? This one was a good one. It was a prior leader as well, and it kind of created this base here. You can kind of draw a little wedge if you want. So yeah, that's one I'm still in. ANVS got pumped. However, I did have it on radar just in terms of a breakout here. As you can see, biotech up 200% on the year. Had a nice consolidation. Was kind of fading, but then had a gap up here. Was consolidating, and then there was a nice flag, right? And I had it, and I woke up and it was up. What's this? It was up 100 some percent or 40 some percent. Sorry, and I did not get in it because of that. I said up 40. It's kind of a lot. It's risking it. You know, maybe if it was up 20, 40, I was gonna get in it for sure. I had great, you know, news, and then it ended up going up like 220%, which is insane. And then they offered late day, but this, you know, a lot of pumpers got into it late day as well. So oftentimes on these EPs, if pumpers get in it, you know, you shouldn't hold it multi-day. You know, on these mega cap stocks you can, but on these, when pumpers get in it, it's up 250%. You know, should start selling the majority of it. But anyway, this was another EP. This one too, it wasn't an A plus. You don't have minimal overhead supply here. As you can see, it was kind of in a downtrend. There was still a lot of overhead supply in this area. However, again, look at this volume, insane volume, highest volume day by, you know, double. So again, this is one. It's like a B grade, but it was setting up, and then the volume profile just says it all, right? You got to get it. It was a potential one. SGMS, I did get in this one, but got stopped out. Had good numbers here, but the market was iffy, as you guys remember at the beginning of the month. And then it gapped up here when it had, there was a few articles coming out that they're, based on their cash flow and all that, some analysts determined that they were way undervalued, their stock price. So it gapped up on top of these good earnings here, but the market wasn't ready, right? So, you know, here you could tell it was like an atomic bomb ready to go, but the market wasn't ready. So it was kind of consolidating. Then here you got that good news gap up. I got in here. And if we zoom in here, you can see that post weekend, this was over the weekend, it gapped down here. And I got out, you know, a little bit below break even. And, you know, where is it now? It's up 30% from where I stopped out. But as you know, when things go below your stop, you got to stop out and get out. It was a hard one, but it could have been a play for someone that played it differently than me. CLF, this is one of the steel plays. As I mentioned, we're a hot sector, and I played it on this day here. You can see here, perfect wedge forming, and I got on opening range highs here. Took some out on the top and ended up getting stopped out around this area here. Again, market was, you know, sketchy all month as we talked. So in any other market like last year, this was going to 30, right? But anyway, you kind of got to settle for these small traders right now. TNA, I played it right here. Again, if you look on a higher time frame, it just looks phenomenal. It just gets me excited, gets me tingling. So hopefully you can get some follow through. Here again, another EP on this day here, gap up, multi-month base, insane numbers. You guys can take a look at them, and now it's up 35%. Again, like I said, it's all EPs. DDS here again. It wasn't an uptrend, which for a while, so it was up like 45%, which I would have liked it to be a little bit more sideways, which was tricky. I didn't even see this on my scan actually. But anyway, again, insane numbers, and you know, it's actually setting up again here for next month. It's a bit more tricky because, you know, it's up what? In a year, it's up 400%. What is that? Up 400%. So it is tricky. You know, we had an EP here, you had another run here, and had another one. So every time you get kind of an EP kind of setup, or any type of setup, every time you get less and less powerful, and there's less of a likelihood that they work. But nevertheless, it's setting up. IGT here again, insane numbers, 26% move. Here again, same thing, same as TGLS. I don't know, what was it? It was the same one as this one, higher. There's still overhead supply, so it's not ideal, as you can see here. But it was, you know, it's kind of been going sideways, kind of holding up somewhat decent. And again, volume killed. You know, there's only 2 other days that had higher volume days by barely, right? So this is one that could have been played. It's kind of a more illiquid one, but again, good EP, would have been up 35% as of now and potentially more. BTX, this was a short play that I didn't play. There's a little play here, but I'm not going to go over this because it was a very tricky play. But this is a perfect example when people say, you know, it goes down so many days, it has to bounce. This thing has to bounce in, you know, over a month. It's just there's barely any green days. So anyone that says that it has to bounce, it doesn't have to bounce, right? It's this is what they look like. Poster this and send this to anyone that says it has to bounce, including me, right? I got proved wrong on this. So I tried it once, I think, on this day here, and got stopped out. LPSD, what's this one? TITN, this one just happened. You know, we can go over it next month if it hasn't followed through. But again, EP type style thing. BGFV, again, look at this setup. Perfect flag. This was a setup prior to even the EP. This is what you call an A+, right? It is up a lot on the year, but look at this flag forming prior to the breakout. Great numbers, great forward-looking numbers, right? Gaps up, massive volume. You know, there's only two other days that have the same kind of volume, and then you get a 70% move. And setting up again, just by the way, for a NAT or whatnot. I might not play, but still. Again, EP rule this month. And this is going to go into something we're going to talk about after. AMC here, I guess, had a new CEO here. There's a few things, you know, this is a Wall Street Bets thing, you know, when all the hype was up. It's kind of forming a wedge here, and I played it on this day here, sold almost all here. Again, market was, you got to kind of adapt. This is another discussion itself, but you know, sometimes you got to be a little bit more cautious and be aggressive with you're selling. Don't you know, change your style of trading, but sometimes, you know, it's okay to be a bit more aggressive, and instead of taking a quarter after 3 or 4 days, you know, taking half, right? Things like that. And the second you see weakness, get out. So that was kind of my head, and I got out most here, and then the rest on this gap down here was still, my entry was still here, but, and you know, I could have kept it really, never closed below that 10-day other than this day, and you know, looking back, I could have kept it, but again, market was not good, so I was a bit more aggressive. Wall Street Bets got a hold of it here. I didn't play it, but I did play the short play on this gap up here, which was on Friday, which was my biggest winner of, you know, one of my biggest winners of the year, probably my 6th or 7th biggest winner, but still it was one of my biggest ones, and I got in right here, right? I didn't get in here. I located. I knew there's a lot. I was just scared of this happening, to not get in on opening range highs. I played this here, and really I got in. I wanted to get in on this because if you guys, you know, intraday, this candle went all the way up, and then it wicked all the way back. And in my head, I said, okay, if this goes red, I'm gonna just risk, you know, this area here. So it would have been like an 8% risk. Also, you go lower size with these kind of volatility, so half size, which is, you know, 3.5% risk, which is what I usually risk. And I'd risk the top. Actually, I would have risked the top of this candle, right? So 5% if it went red, because this candle was a huge wick back. I tried to get in here. Obviously, my broker didn't fill me, so I just canceled it, let it go. What I did is I let it form a base here, right, on based off these levels here, and I got in. I wonder if you can even get the 1 minute here. And I got in, actually I got in higher than that, sorry guys. This was actually NAD point. I got in right here on the 1 minute. After, as you can say, as I said, I didn't get filled. So I got in somewhere here. VWAP was right about, like right in between here. It was like going in between. And I was just risking like this candle right here, like prior. It was a tight stop. It was like 1 or 2%. And then, yeah, the rest was history, right? So it went down 25, 30%. So this was my biggest winner. Played the parabolic short, which is, again, a really profitable play if you can learn it. A little bit more riskier, but it's a great play. Again, here, another EP, 60% since entry and potentially more. And GME, I played this one here. Again, there's a huge base here, wedge, you know, forming. As you can see right here is where I got in. Volume was kind of coming in. Not like this type of volume. I would have liked this, really. If it got like anywhere even near this volume, it probably went to, you know, 350 or so, whatever. But unfortunately it didn't. But volume did come in a little bit, and it was a good 40% winner. It went 15, I think. I was at like 44 at the max. So yeah, these are main winners. Just went over them quickly. As you can see, they're mainly all EPs. You know, but the leaders are still looking good. If you want to take a look through them, a lot of them are still building higher lows. You know, SE. You guys can go through them. You know, they're holding up, and the strong ones are creating higher lows on the higher time frames. See, even net, right? You can see it's a little bit of a higher low. So yeah, and again, last month I went on what's the biggest thing I could work on. And this month is going to be on these EPs. As you can see, there's a lot of EPs here. It's pretty much everything that went there, and they all went, 30, 40, 60, 100%. And I maybe got one of them. I don't even think I got one of them. So going forward, it goes back to wanting to become the best trader and having that level of self-leadership. No one's going to tell you what to do, right? You got to have that inner instinct, to figure out, why did I miss these? No one's going to tell you, like you're in high school, like, hey, you did this wrong. No one's going to do that for you. You got to figure out for yourself. And for me, this month was EPs. I missed out on a lot of opportunities on the EP side. And as I said, I was happy with my trading. My goal was not to be in a drawdown. I was mostly cash, and a lot of traders around the market had similar. I don't know anyone that really made more than a few percent this month. Obviously, maybe day traders, but in the swing trading world. So my goal was hit, but either way, there was still potential. There's a lot of these EPs that I could have probably been in a 4, 5, 6, 7, 8% return month, which would have been great if I would have caught them. So next month, what I've been working on this weekend, is reviewing this and realizing how much how many I lost on. So, you got to make a plan, figure out how you're going to find these. I couldn't find them. I wasn't finding them. So now, my month project is, how do you find these EPs? And I know how to play them. I need to find them, right? So every month there's always things you can work on and bettering yourself. Always, always, always. Doesn't matter who you are. You can make $100 million and there's still stuff you can really, really, hone yourself onto and really master. So that's for me, because there's a lot of missed opportunity there. And again, a lot of swing traders didn't make much money this month, as I mentioned. And this goes into another point where I wanted to discuss how you can't switch trading styles. As I mentioned a while ago, I was a bit more aggressive. That's not necessarily trading your style. That's more having situational awareness of the market. I know a lot of people that go from day trading to swing trading to scalping. They go depending on what the market's giving you, right? And that should not be that should not be your goal, right? You should really hone in on one skill. I do not know any trader that's made, generational type money switching styles. A lot of people, the swing trade, there's not a lot of setups in the swing trading. So then they start day trading, just because they're addicted to making money. But the issue with that is, sure, you're addicted, you switch strategies, but they never master one strategy. And the issue with that is, you never become the master of your skill. And what happens is when the swing trading market turns hot, they lag the swing trader, leaders in terms of returns. So if a very good swing trader, they'll make 20, 30% in a good run and they'll only make 15. Why? Because they always switch styles. And then right now, they'll be making a little bit of percentage, but they're always average at each style. They never really master. And to make explosive returns, you need to, focus on a niche and dedicate years and years at, mastering that niche. Don't bounce around. And sure, you can make money, but are you going to make big money? Are you really become like a master? Like, I'm not just talking, average. If you want to really become, a skillful trader and master your craft, you got to hone in on one. And because it's very hard to take a step back and zoom in, and change the lens on your eyes when trading to different trading styles. It's very hard. I don't know anyone that can do it. I know a few people that can do it quite well, actually, but especially as you size up and you scale, it's not scalable. So it goes back, a lot of people, talk about this, Stockbee, Mark, they talk about this as well. It's not only me, right? You got to hone in on what you don't see these guys jump in styles, right? A lot of beginner traders do that. And even me, I do it once in a while, like little trades here and there, but I've got away from it compared to in the past. And what it's done is when the markets are dead, guess what? You can always be a better swing trader. So read, study, study market history, et cetera, et cetera. During this last 2 months, I've learned what I could not believe I could have learned. Just articles, read everything, learn everything, study charts instead of going to day trading. And then when the market's going to come back again, guess what? You'll be one of the best swing traders around in terms of returns. So that's another note on skipping and jumping, because what happens, and then you go back to swing, and then you're not as good as everyone else, or as good as you could be, because you're skipping styles, right? It's like in sports, if someone's trying to be a scorer, and then the next month they're playing defense, those are just all around average players. But if you want like a Ronaldo, where he's a goal scorer, right? He doesn't focus on defense. He doesn't go and like, obviously it's part of his play, but 99% of his time, is focused on becoming the best, goal scorer he can be. And that's the same thing in trading. You got to focus on your own niche, right? And master your craft, or else you'll never do it. And because market condition, basically what I'm trying to say is, as market conditions change, that should not change your trading style at all. Hone in on one style with fits your personality, whether that's position trading, scalping, day trading. Everyone has a different personality, right? Everyone fits a different characteristic. It's not to mean one is better than the other. Hone in on one and master it. And that goes back to everything I've been saying about being self-motivated and having that self, level of leadership in terms of, wanting to always better yourself and find, you just dedicate yourself to a craft. And if everyone in the stock market would just do that, you'd make returns. Trust me. It's that, it's simple, but it's hard, right? So that's in terms of that. And then I think that's all for me this month. I guess there's a lot of rant in here. But like I said, there wasn't a lot of plays. There's a few, but nothing too spectacular other than EPs, and that's something I got to work on. And again, like I said, find a niche, find that inner discipline and self-leadership, that level of self-leadership that's going to guide you to become, a master of your craft, and don't listen to anyone and only listen to the market. Never think someone else is smarter than you, right? You can be as smart as anyone out there, and never think you're smarter than the market. And I'm going to end it on that note, and from a quote from the O'Neill book, which is, by the way, a book that everyone should read, and how to trade the stock market, from William O'Neill. And this is the quote. So he goes on to talk about how, retail traders and, Wall Street people, and he goes on by saying the more intelligent people think they are, the more they think they know about the market and what they are doing. And that means the more they have to learn the hard way on how little they really know about how outsmarting the stock market. Never fight the market. The market will always be bigger than you. And you should always follow those rules. All right, that's it for me, and we'll talk next week, or next month, I guess. All right, good luck, everyone.